Hello and welcome to WION World is One. I'm Palki Sharma Upadhyay and you're watching the 4th edition of the WION Global Summit. This event has served as a platform for constructive conversation. Usually it happens in a different setting, in a different city, in the company of our dialogue partners and viewers. But thanks to China and the virus from Wuhan, events too have changed. The Wuhan virus pandemic is the greatest test for humanity since the Second World War. It has infected more than 14 million people. The world is pointing fingers at China. 7 months into the pandemic, no one is refuting 3 facts. 1, the virus came from Wuhan. 2, China responded by trying to hide it. And 3, it has now launched an aggressive campaign to amass more power. China's not-so-peaceful rise and its hostile behavior throws up new challenges for the world. So in our 4th Global Summit, we've decided to decode China. What does China's bid for global dominance mean for the world? What's the answer to China's growing military power, its provocations, and its propaganda? Will Chinese technology giants fulfill its superpower dreams? And most importantly, what about the man at the helm, Xi Jinping? How should the world read the moves of the Chinese president? 12 opinion makers from different parts of the world, the best minds on China, will take these questions today. Let's begin the 4th edition of the WION Global Summit with our first session. China is the world's workshop. It is what many call a textbook example of an economic miracle. But the story of China's dramatic economic rise is not black and white. In the last 4 decades, China did pull millions out of poverty, but it also widened the gap between the rich and the poor. China did appear to tide over the 2008 financial crisis, but it did so by setting off a time bomb of debt. Under Xi Jinping, China is more ambitious than ever. It wants to monopolize global trade with its Belt and Road Initiative. But it's running out of cash. Bad debts are catching up. Investors are moving out. Is China an economy waiting to collapse? And what would that mean for the world? Welcome to the first session of the WION Global Summit. We'll be talking about China's growth, its Great Wall of Debt, and the economic distancing it faces. And joining me to discuss this are some of the most informed voices on China, journalists and authors. Dexter Roberts is with us from Missoula, United States. He's lived in China for 2 decades. He's reported extensively on China's economics, business, politics, China's wealth inequality, and the myth of Chinese capitalism. We have Michael Schuman joining us from Hong Kong. He has covered China for over 23 years. He argues that the heavy-handedness of the Chinese state is dragging down the country's economy. And Dinny McMahon, he took his first lesson on China, I'm told, at the age of 9. He has spent over a decade reporting from China and has written extensively on Chinese loans, shadow banks, the Great Wall of Debt. Gentlemen, welcome to WION. Michael Schuman, let me begin with you. Since we are talking about China's economy, we'll start with the latest figures. GDP numbers for the 2nd quarter. China claims to have averted recession and seen a 3.2% growth. China's record with numbers, in fact, has not been stellar. So would you trust these GDP figures?
Well, I don't actually think anybody really trusts Chinese data. The way people talk about it is that it's something you should see more as a guide than anything particularly specific. Having said that, it does tell you the direction that things are going, and compared to a lot of economies in the world at this moment, China is starting to recover from the crisis caused by the pandemic. It still has a long way to go on that. There was a tremendous blow during the pandemic and the lockdown that followed to jobs and incomes, and that's not going to be resolved right away. But it is certainly on its way back up.
Dexter Roberts, it is said that China's leaders are terrified by the prospect of a recession. They will not even admit to the possibility of one to maintain political legitimacy. Has the Wuhan virus, according to you, bugged China's growth story, and how much trouble are they in?
Well, I agree with Michael that obviously the Chinese statistics are always questionable, but it is clear that the trend line is stronger growth. What I focus in on is looking at where that growth is coming from. And it's clear that once again, China's doubling down on investment, on supporting its state enterprises. And I believe COVID-19 is actually exacerbating the divisions we already saw in the economy. I think one important number to look at, if you look at the migrant worker population, which is some 300 million strong, so we're talking about a very large portion of the workforce, in the second quarter, we saw their incomes actually shrink by 7%. And they weren't doing that well before. So another number to look at, domestic consumption as a proportion of GDP. That has barely budged for many years now. It's still stubbornly below 40% of GDP, comparable to probably about a 60% global average. And that is a measure of China's inability to transition to a more sustainable economy.
Dinny McMahon, China's economic challenges are not new, and most China watchers have linked them to China's politics. Would you say that economic reform is not possible without substantial political reform, which we see no sign of?
Well, it really comes down to what you mean by reform. So for such a long time, when China watchers have talked about reform in the Chinese context, it's taken a very specific perspective. It's been very much about free market reform, about China opening up its economy, about dismantling the state apparatus, and to give the market a greater role in setting the prices of pretty much everything. Now, what we see in China fairly constantly and consistently is constant tweaking and changes to economic regulations to make the current system work better than it previously did. So I don't think there's any real movement in China at the moment towards reform, broadly speaking, as we typically understood it. However, the authorities are constantly trying to change how the existing system works to be able to make it work better, to be able to sustain that growth trajectory, to be able to come up with new sources of growth without actually relinquishing control. And so, yes, speaking to your question, to sort of have the sort of reform that we understand, that we typically think of, that being free market reform, then there would have to really be some sort of political sea change in China. Now, what we're seeing at the moment is nothing like that. If anything, the economic changes we're seeing are geared towards making the current system stronger.
Right, and talking about changes, here's the latest one. Let's talk about something that made headlines recently, the bank run at Hebei. Dexter Roberts, they're limiting bank transactions. Would you say this is an indicator that the Chinese banking system is under immense strain? And you've lived in China for 2 decades. Did you see something like this before?
I think it clearly indicates that there are growing strains on the banking system. We have seen small bank runs over the years in China when I was there as well, and we'll continue to see them. I think you have to keep in mind that the majority of the banking system is still state-owned, and to a still rather large degree, the decision of whether an individual bank or financial institution goes bankrupt or shuts down is the government's decision, and they do still have the power to control that. But circling back to your original question, clearly it is a sign of growing strains in the financial system.
Right, and the banks are under strain, and so are the shadow banks. Dinny McMahon, China's debt is 317% of its GDP. It's not unique, but it's still very big. You've argued that the bigger problem with the Chinese debt is the pace at which it was accumulated and not the amount per se. Why is that?
Because what happens is that, as you mentioned, other countries have comparably large levels of debt. You take the United States, for example. I think its debt to GDP ratio prior to the pandemic was probably about 260%. But that 260% had sort of gradually built up in waves over sort of the course of 200 years of American history. Whereas what happened in China is that debt accumulated very, very quickly over the pace of the last decade. Now, what happens is as that debt accumulates, an economy finds fewer and fewer productive outlets for that debt to be invested in. And so as it accumulates faster, continues to accumulate faster, it ends up in projects that just aren't as productive anymore. So it ends up in in redundant factories in industries that are already experiencing industrial capacity. It ends up in producing infrastructure that is underutilized, or it ends up producing things like ghost cities. So that's kind of the real risk, that certainly debt in and of itself is not a bad thing. If it grows at a reasonable pace, then it can stimulate economic growth by being put to work in productive uses. But what we've seen in China is, over the course of the last decade, is the pace of expansion has been such that these days it is quite difficult, particularly when it comes to investing in infrastructure, to kind of find projects that are genuinely going to take that debt and generate some genuine economic return, a comparable economic return out of it.
Michael Schuman, let me quote from your book. China was a superpower for almost all of its history, and it wants to be a superpower again. You also say that Xi Jinping appears to be a reincarnation of the empire-building Chinese emperors. Is this how earlier Chinese emperors also built their empires on debt, or is this a Xi Jinping special edition?
Well, I think one of the interesting ways to look at China's rise, is it's different than the way that a lot of people in the U.S. and Europe and elsewhere talk about it. We always talk about China as an emerging market, or as a rising country, and of course that's true in very recent history. But when you look at Chinese history overall, China was a major economic power, and one of the largest economies in the world for most of its history. It was a major engine of global trade. It produced what we would call high-tech exports, things like porcelain, silk that the rest of the world really wanted. So, I think a better way to look at what's going on with China today is that not so much that it's emerging, but that to a certain extent things are being restored to a certain kind of normalcy of the way the world was for most of human history. I think the question going, we ask all the time, what does China want? And I think the answer to that question is China wants what it always had. I think the big question going forward is whether or not they can achieve that, and are the economic policies that they have in place going to be able to sustain their economic growth and that economic rise, because that's the basis of everything else. That's the basis of their political clout, to the basis of their military buildup. So if their economy falters, then their entire kind of agenda to this kind of return to Chinese greatness could end up being in trouble.
Right. Xi Jinping is out to undo the injustices, or the perceived injustices of history. And in the process, Dexter Roberts, he has ended up picking a lot of fights, including trade wars. How much are these trade wars hurting China, and is their impact more symbolic than substantial so far?
I think the conflicts that China has with its trading partners are, substantial and damaging to China's global status. By one count, over a dozen of China's top 20 trading partners have major disputes with China. And this is not helpful at all. We've seen in the 2-year tariff war with the U.S., we've seen also a negative impact on the Chinese economy through this trade war mainly waged with tariffs. And so there's the issue of, the practical impact of tariffs, which is accelerating, I should say, not a decoupling from China, but a global diversification of the global supply chain away from such a reliance on China. And also there's sort of an image issue. Under Xi Jinping, we've seen a marked move away from what previously was described by Paramount leader Deng Xiaoping as sort of keeping your head low and biding your time and being patient as you grow. Xi Jinping clearly is trying to he's trying to grow the economy. He has very ambitious goals, but he's also pushing out in new ways that are upsetting and leading to pushback from the rest of the world as we go forward.
Dinny McMahon, what would a recession or a substantial slowdown in the Chinese economy mean for the rest of the world?
It's a difficult question to answer because China affects different economies in very different ways. So traditionally, as you said in your introduction, China was the world's factory floor, and that's to a certain extent, that's how we think about it. But over the past decade, it's also become a massive consumer of goods from all around the world. So certainly from commodity-producing countries like Australia and Brazil, China is a huge part of both of those countries' total exports. But also what we've seen is that as China's middle class has developed and gotten bigger as well, that China is I think the world's largest market for luxury goods. Chinese tourists are going abroad in ever greater numbers. The education sectors of the United States, the UK, Australia are hugely dependent on Chinese students coming to study in those countries' universities. So what are the impact of a recession in China, how that would affect the world, has a lot to do with, to a certain extent, what parts of the Chinese economy slow. To what extent do Chinese consumers and the middle class get hit? How does the Chinese government respond to a slowdown? Because if the Chinese government responds to a recession by just massively ramping up infrastructure, then of course commodity exporting countries sort of stand to benefit significantly again. So the short answer is that China has become a huge contributor of growth in a whole lot of niche and important industries around the world over the past decade. And the way that those countries will be and those markets will be affected if a recession does happen in China will to a certain extent also have to do with how the Chinese government responds to sort of counteracting the effects of that recession. But of course, the short answer is 10, 15 years ago, a recession in China wouldn't really be that relevant to the rest of the world. Today, it would have a genuine impact, and it would certainly cause conniptions in financial markets globally.
Michael Schuman, in India, the call to boycott China is growing louder, and experts say that it's easier said than done. While the hashtag is trending, it won't be so easy. It won't be so easy for the rest of the world, I'm assuming. How difficult would it be to economically isolate China as a way to perhaps punish it for the pandemic?
Well, I think what's interesting is that it feels a little bit like China is almost trying to isolate itself. I mean, when you see how the world is reacting to some of Chinese policies, whether on trade and human rights and security issues, I think they're running the risk of having doors closed on them. When you look at the recent decision in the UK to kind of ban Huawei from their telecom systems, and you look at the trouble that TikTok, of course, is having in India, but also in the US, and it looks like other countries as well. This is really a reaction to Xi Jinping's policies, and both at home and abroad. And China is the world's second largest economy, but it's still a middle-income country. It still relies heavily on the rest of the world for let's say, technology. It needs the cooperation of the rest of the world to continue to grow. It needs access to global markets. It needs access to global technology. And if those doors are going to start closing on it, then you have to. It's going to be yet another problem that China faces, along with the others that we've been discussing, if it really wants to continue its economic miracle.
Yes, China remains a middle-income country. Dexter Roberts, some have described China's economic transition as a trapped transition. You witnessed China's so-called unprecedented growth. How much of this so-called miracle is a myth?
So I think, it's undeniable that China's economic growth has been, I don't know if miraculous is a strong word, but it's been, we haven't seen the likes of it anywhere else in the world. We saw the economy grow from when I showed up in China in the mid-90s from somewhere towards the bottom of the top 10 GDPs in the world to now number 2, on its way possibly to becoming number 1. And we've seen a commensurate soaring of income levels throughout China as well. So that's undeniable. What I'm concerned about, and actually what I write about in my new book, The Myth of Chinese Capitalism, is what we're going to see going forward. I think China's facing the biggest economic transition, arguably since Deng Xiaoping's reform and opening back in the early 80s. And that transition is from this factory of the world model to a economy that is much more service-driven, does still have manufacturing, but much higher end and much more automated factories, and crucially, a much more domestic consumption-driven economy. And the trade war and COVID-19 have only made the necessity of China making that transition to a more domestic-driven economy more obvious to the leadership and more urgent. And one of the myths of my book is that the middle class in China will keep on growing in leaps and bounds as the world has gotten used to it, and China will continue to be the global growth driver that it has been. I argue that reforms have really stalled over the last 5-6 years, and crucially, China will not continue to grow its middle class and will not continue to be the global growth driver we've seen in the past unless it finds a way to better integrate about half of its population, which is the other China, for lack of a better word, of migrants and their relatives in the countryside.
Right. Dinny McMahon, China is also urbanizing at a very fast pace, perhaps among the fastest in the world. Infrastructure development is a big factor of China's rising debt also, but it continues to build these cities, which end up as ghost cities, as someone mentioned. Why is China then building them?
Well, it kind of feeds into sort of the growth model. So one of the reasons China has been able to grow the way that it has over the past 30 years is that at a local level, mayors, governors, city officials have a lot of latitude to be able to innovate, come up with new ways to sort of leverage their local circumstances to be able to drive growth. But the other side of that equation is that those officials are also under a lot of pressure to generate growth as well. So when we have seen the overbuilding of real estate in China's smaller cities in particular, one of the reasons, and the ghost city phenomenon that you referred to, one of the reasons, or the key reason that's happening, is because local mayors realize that the easiest way to stimulate economic growth in their area is to borrow money and to build things. Now, of course, Chinese officials, mayors, governors are really in some ways no different from elected officials elsewhere in the world. They have a relatively finite period of time in office, after which point they get promoted upwards and onwards. So you might have a mayor who has a set time in office of 5 years, but might get moved onwards after about 3 years, which gives him or her a very short period of time in which to prove their ability to successfully be able to generate economic growth. And so what they do is they borrow money, build things, and then pass on the debt problems effectively to whoever succeeds them in that role. Now, over the last few years, Xi Jinping has been trying to rein in that problem by telling officials that whatever debt decisions they make on they make in the course of, whatever debt decisions are made during their time in office will travel with them throughout the rest of their career. And so we see to a certain extent that changing dynamic has helped to rein in the pace of accumulation of debt. However, of course, now during the pandemic, we're in a very different situation again, because on one hand, Beijing has managed to get local governments to be a little bit more circumspect when it comes to borrowing debt. But now during the pandemic, Beijing is now pushing them to borrow more money again to be able to stimulate economic growth by building infrastructure again. Now that's causing all sorts of problems because on one level, growth depends on the ramping up of infrastructure construction again. But local officials are now a little bit more wary of taking that debt on because once the pandemic passes, what do their individual political prospects look like if they are not able to pay down the debt that they have now accumulated to try and get China through this particularly fraught economic period of time? So it's it's an increasingly complex scenario here about just how much local governments are willing to borrow, partly balancing the needs of the economy and their own political prospects.
Right. Michael Schuman, overinvestment has been an old problem with China, and so is the asset bubble and the surplus inventory and so on. It's been talked about for years now. Is the government caught in a vicious cycle of its own making?
Well, one of the big problems that this government has in making its economic policy is that it never really allows the economy to kind of find its own level. They're very, very concerned about the growth targets. They see it as a measure of the success of the party and proof that the party is serving the country well. This is the root of a lot of what we've been talking about. Why has China built up so much debt? Why does China continue to build infrastructure that maybe it doesn't exactly need? Why does China keep a lot of steel mills open that it obviously doesn't need, and continue to build property it doesn't need? This is all basically to keep the growth rate up, so there's a certain artificiality to what goes on here, and that's the source of a lot of its problems. I think one of the biggest problems that the economy has going forward is this resource allocation. Where does money go and why? And what you'll find is that money tends to go to a lot of unproductive sectors and unproductive companies, and it's taken away from especially private companies that are far more productive than, let's say, state enterprises here in China.
Right, and there's a new problem that's staring them in the face, Michael Schuman. The Wuhan virus has taught the world social distancing. Well, the world is also now exploring economic distancing from China. Companies are leaving or mulling an exit. Was this a long time coming, or is this a result of Xi Jinping's political economy?
Well, part of it is just kind of an inevitable development process. A lot of the factories that people think about, all those consumer goods and clothing, electronics that moved here to China. Part of it was that they were chasing low cost, but China's not that low cost environment anymore that it was 10 years ago, 15 years ago, 20 years ago. So some of this business was just kind of going to move naturally to other economies. You see that happening with Vietnam and Bangladesh and India to a certain extent, where companies are looking for lower costs, but they're also looking to diversify their supply chain. I think the political dynamic comes in when you get into this issue of decoupling, and you can see policies being implemented both in Beijing and Washington and elsewhere that are designed to kind of start to distance the economies and change the economic relationship.
Right. If I could just add to what you said, China's USP was, as you said, cheap and abundant labor. Now, I have some very interesting figures for our viewers. In the last 30 years, the average wage of a manufacturing laborer has gone up by 8,500%, and the workforce, as we know, is aging. Dexter Roberts, you have written about Dongyuan, China's biggest manufacturing base and home to the largest number of migrant workers. If these factories shut shop or shift overseas, what happens to these people? Does the government have a plan?
Well, the short answer is the government does have a plan. The question is whether it can be successfully implemented. And one big, of course, as I mentioned earlier, part of this economic transition, which the government has mapped out pretty clearly, is to move much more to a service-driven economy. We've already seen it happen quite naturally. There are now more migrant workers in China working in the services economy than there are in manufacturing and on construction sites. But the issue is, what are those new service jobs? And the Chinese government has hoped that they will be well-paying and interesting jobs that would sort of help boost the Chinese economy. What we've seen so far is very much the opposite. Service jobs have been mainly low-paying. One of the most popular and important during COVID-19 jobs for migrant workers has been delivery, motorcycle courier or motorcycle delivery. And it pays all right, but it's absolutely the only skill there is driving quickly through traffic in the cities. And it's a very dangerous job for that reason. There's all kinds of accidents that people have. So that's on the service side. The other big part of the government's plan is they would like to see many of these migrants go back to the interior of China, which is still, after several decades, is still lagging the rest of the country. And they would like to see these migrants go back, become small entrepreneurs, use e-commerce, and drive the local economies in these sort of left behind parts of China. But that is also deeply problematic. They've been trying to develop the West since at least Xi Jinping, the former leader, I think in the year 2000, they launched a major plan to try to reverse those imbalances and encourage some of the migrants to go back. And it really has not been successful at all. One of the biggest questions to my mind going forward is what will happen to this other China of 300-some million migrant workers and several hundred million rural cousins and rural relatives that are still in the countryside. It's not clear at all how they will be employed or how they will productively contribute to the economy.
Michael Schuman, would you say one of the biggest liabilities for China right now is also the state-owned enterprises? The line between private and public players is really blurred. How big a problem does this pose?
Well, it's actually a huge problem. It goes back to something we were talking about earlier about where does money go and how's it used? I mean, the way that an economy is going to succeed is if resources go to its most productive, most creative parts. That doesn't necessarily happen here in China. The vast majority, for example, of bank finance goes to state-owned enterprises, and this kind of deprives the private sector of resources. And when you look at it by just about any measure, the state-owned enterprises generally are far less efficient, far less profitable, and productive and innovative and creative than the private sector. This is one of the big questions about what Xi Jinping has done with the economy, because under him there has been a significant shift, away from more market-oriented, market reform policies towards a more state-led program. In the U.S., there's a lot of worry about Chinese industrial policies, where the state is targeting certain industries and subsidizing them for special development to create national champions. You see it in electric vehicles. You can see it in chips. You can see it in robotics. And there's a lot of worry about this in the U.S., but there's a case to be made that these policies actually are really not what China needs, that it's a lot of this money is flowing into companies that really aren't very good at what they're doing. A lot of excess capacity and its questions really, is it generating the kind of innovation that China really needs to develop the economy going forward? I mean, there's some thinking in Washington that rather than trying to correct Chinese industrial policies, that the U.S. should just kind of let China do this and basically let China fail. I wouldn't bet money against China, so to speak, but there's a lot of what's going on with Xi Jinping's very state-led policies that raise questions about whether this economy can continue to succeed and going forward in the way that it has in the past.
Dexter Roberts, has China begun facing what they call the paradox of authoritarian regimes? Growth tends to lead to better incomes, better standard of living, higher expectations, and so public discontent.
So if you look at, you really, again, need to look at different parts of China, and against many predictions including by the publication I used to work for, media and analysts, what we have not seen is a growing middle class that is demanding more democracy, certainly, or even much stronger civil rights. That has not been the case at all, which was the prediction made very boldly by all sorts of people, including former U.S. President Bill Clinton, when I think he moved China and gave them, ended this most favored nation trading status annual review and said, we're going to end this. We're going to treat China like a more normal nation. We're going to trade with them more. And inevitably that will bring democracy. And clearly he was wrong. If you look the latest survey out by UC San Diego, looking at some of the public responses to in the last few months during COVID-19, we've seen actually growing support for the government. But a crucial caveat, that is amongst urban Chinese. Urban Chinese have really been beneficiaries of this implicit bargain where the party says we will continue to grow living standards and you, the populace, will not demand growing civil rights. We're not so sure about what the rural and the the rural population and the migrant population is feeling now. There have been surveys that show growing discontent with the fact that they are effectively treated as second-class citizens. What I'm interested in seeing going forward is what starts to happen as that implicit economic bargain that the party has had with the people starts to fray. I do not expect China to continue to be able to grow incomes across the board the way it has in previous decades. And as that growth slows, and as I said earlier, I mean, migrant workers actually saw their incomes fall by 7% in the second quarter. What does that mean? And I would imagine growing pressures by the people towards the Communist Party in China, which is the leadership.
I want to ask this question to Dinny McMahon about the BRI. Given the way things are going and a lot of countries are asking for their debt to be restructured, can China sustain the financial costs and debt defaults of the Belt and Road Initiative?
The thing you've got to keep in mind is that the Belt and Road Initiative, the idea behind it, the vision behind it, isn't set in stone. It's a sort of, the BRI it's a fairly amorphous thing, and it can kind of change with the circumstances. And so certainly during its early phases, so Xi Jinping announced his vision for the Belt and Road Initiative in 2013. During those early stages, the focus of BRI was very much about building sort of bricks and mortar, sort of steel and concrete infrastructure in developing countries, whether that be highways or office buildings or football stadiums or coal-fired powered plants. Now, that has, as you pointed out, that sort of investment has caused a lot of problems for China recently, because diplomatically some countries have been caught effectively in debt traps. They feel that they're over-indebted to the Chinese. Certainly there has been instances of corruption involved in some of those deals that have come to light after there's been a change in government in some of the recipient nations. But this isn't necessarily what BRI has to be. And so what we find these days is that China increasingly talks about things like the digital Belt and Road Initiative. And so I think what we're going to see in the future is that the focus will be less on China just deploying huge amounts of money to build highways and football stadiums, and it will be more about building things like submarine cables or encouraging countries to use China's network of satellites for GPS positioning. It'll be China's tech companies rolling out cloud computing infrastructure in developing countries. It's stuff that it's infrastructure still, but it's infrastructure that China will be able to benefit directly from. And it's also infrastructure that will tie other nations more closely together with China through the infrastructure of communications. And so I think the best way to think of BRI is that it's a vision. It is a plank of China's foreign policy. In lieu of having the sort of soft power that the United States uses to build up relationships and friends around the world, it's China using investment and providing infrastructure to build up those relationships. Now, the nature of that infrastructure, how countries use it, and how much needs to be deployed in order for it to be successful, those equations are going to change with China's political considerations, with the financial resources that it has on hand at any given time, and ultimately what Beijing's goals look like at any point in time. And so I think the way that we've seen BRI up until this point, that's starting to change. That doesn't mean that China is going to give the idea away. I think it's just going to change the way that it deploys the concept in ways that ultimately benefit China in different ways.
Right. Michael Schuman, I want to end with a question to you. And I agree with Dinny McMahon when we say that we are seeing the BRI in a different light. Many countries are beginning to see the BRI as a debt trap. The idea was for Xi Jinping to integrate at least 30% of the global GDP through this Belt and Road Initiative. Do you think that going forward, countries will be open to this kind of Chinese investment and involvement?
That's a good question. I think that the world is taking a different look at China at this point. In the wake of the COVID pandemic, and also in light of a lot of new Chinese policies, for example, in what's gone on here in Hong Kong with the national security law, and other very, very aggressive ways that China is trying to assert itself on the world stage. And you can almost feel a certain kind of a shift, possibly a shift going on, something that already happened in the United States in the last 3-4 years, where for most of the last half century, it was kind of a pillar of U.S. foreign policy to engage with China and try to make China into a partner in the world order. That's been more or less totally thrown out, and now the U.S. looks at China as a strategic threat. And other major countries in the world were kind of slow to coming around to that thinking. But when you see what's happening, for example, in India, in the UK, in Australia, and possibly in other parts of Europe, are seen to be slowly gravitating towards where the Trump administration and the U.S. is on the China issue. That doesn't mean China is going to get shut out of every country in the world, especially there's a lot of emerging markets that it's quite close with. But it does mean that China has to think about its policy and the impact that it's having on other nations and what it means for China's development going forward. The Chinese can't continue their rise in isolation. They're just not wealthy enough, and they don't have the technology and political clout yet to do that. If they want to continue heading in this very positive direction that they've been in on the world stage, then they have to think about the role that they want to play in the world going forward in a different way than they currently are.
Right. I think that's a good note to wrap on. We're out of time, but thank you very much, Michael Schuman, Dexter Roberts, Dinny McMahon. Thank you for making time and joining us here on the WION Global Summit.